The IMF raises growth forecasts, but it says the UK is stuck with the G7's highest inflation. The IMF has slightly raised its forecast for global growth this year to 3.2%, saying the impact from tariffs hasn't been as bad as it was expecting back in July. That came as President Trump threatened another major escalation with China, though. Talks are underway to head off his mooted 100% duty added to Chinese goods, and the IMF warned any more tariff hikes could cut their forecast significantly. Hetal Mehta is chief economist at St James's Place. Hetal, what do you make of that revised forecast? Why have tariffs turned out to be not as painful as we thought?
So there are a few things that have helped in terms of the US economic performance despite the tariff shocks. I think it's actually been that the actual tariff rate has been negotiated down. So there was that initial shock, and then there have been some trade deals. And then it's worth remembering that despite the broad-based tariffs, countries have still found ways of rerouting that trade. So there is evidence to see that imports from China into the US have been falling, but they have been rising from other countries, Mexico, Vietnam, amongst others. So there have been a few ways in which that's happened. And then also remember that companies have been able to maybe take on a bit of that buffer, and it's helped to prevent that pass-through to the US consumer. So that's so far what's been helping.
Are we also still waiting, though, for these to fully take effect?
So I think there is some aspect of the inflation still feeding through the system, particularly if tariffs stay where they are now. There's only so long that companies will be able to take that in terms of the squeeze to profits, and at some point that may get more of it may get passed on to consumers. But it's also interesting to note that consumers have been resilient. So even when you strip out things to do with exports and trade, the US consumer has actually held up quite well. They've used a lot of their savings buffers. They're helped by the wealth effects from markets being quite buoyant as well. So it'll be a little bit hard to disentangle. But I think the pickup in inflation that we're seeing is still something to keep an eye on.
Should we be worried then about further escalation between the US and China, and indeed its knock-on effects for the UK and Europe?
So I think when you hear headlines around 100% tariffs on Chinese imports, of course that's going to create some concerns. But despite the very aggressive trade wars that we've seen in the past, we can actually see markets look through that. Economic performance can actually still be reasonably good. I think we also have to bear in mind some of this may be negotiating tactics as opposed to where the final tariff rate is going to stick. So certainly something to keep an eye on, especially when it's related to something that's a precious, rare commodity like the rare earth materials, which are so prevalent in many manufacturing products. But I think it's probably more likely to be a negotiating tactic.
Rachel Reeves is heading to Washington today to pitch the UK as a beacon of stability in volatile times at the IMF's annual meetings. It did slightly boost growth forecasts for the UK, but also said we're stuck with the G7's highest inflation this year and next. Why is that?
So we have a very kind of sticky labour market. Even though we've seen a slowdown and wage growth has been moderating, it's still very high. And core inflation in particular has been high. That's related to services. So I think firms have probably understood how painful it was when we had some skill shortages post-COVID and the pandemic, and they have been willing to pay a little bit higher to retain staff despite the economic uncertainty. And that's really been one of the drivers for the stickier inflation in the UK.
The IMF also said the Bank of England should be very cautious about further cutting. Do you agree?
So I think when inflation is high, it should be pause for thought for central banks, and for the Bank of England in particular. You do have this inflation problem. The inflation expectations numbers in their own surveys are also picking up. And so it's that wage inflation spiral which can be a potential concern. I think the Bank of England needs to weigh that against the slowdown in the labour market that we're seeing in a number of indicators. So it may be a matter of timing rather than just not cutting at all.
That was Hetal Mehta of St James's Place. Don't forget you can watch more videos on Reuters.com.